Well, it all depends on how wide a definition of reacting do you want to get. Traders down here really for the last week and a half have been quite trigger sensitive, so I can't tell you somebody did or somebody didn't. It would make sense if you see somebody smart on the wires saying something like that. You may be more aggressive of a buyer, but I think to attribute anything much more than that to those comments, I would find kind of crazy. Personally.
Steve, are people acting as if he's likely to be on the Fed board and therefore have a voice in actually pushing for some kind of rate cut?
I think people are thinking about the possibility of it. I don't know how much it's priced in. I agree with Rick. There's so much going on in terms of global rates, global economic issues, that it's hard to pinpoint any one thing. It did seem that this announcement of this appointment was a catalyst for the recent downdraft in rates. I hardly think the bond market is, I don't know, so uninformed to think that one person on the Fed is going to mean a change in rates.
One person who might be in the minority, although perhaps there's others who are thinking, but who was it? Was it Kaplan this morning who was saying he thinks it's unlikely we'll need a rate cut?
So this is interesting. Given that the market has drifted towards a rate cut in the September and onward Fed futures, given that there have been a couple comments from some Fed bank presidents about the possibility of rate cuts, I'm sort of expecting now for the center to reassert itself. And we had comments from Kaplan. I think that's commensurate with that. We're looking to comments tomorrow from Vice Chair Richard Clarida in the morning tomorrow to see if that comes up, where I think the Fed's express intent is to be neutral. And to the extent the market leans too far one way towards lower yields, I think they're going to want to reassert the neutrality here.
And what does that look like? Reasserting the neutrality.
It's what do they call it? Open mouth operations. Open mouth operations. It's don't go too far here. Don't go too far here and bank it on this. I don't know. Rick has a better idea of what animates the markets from minute to minute or tick to tick than I ever will. But I do think the market maybe got a little bit carried away with itself, Rickster.
You know, let me tell you, when you wake up and you read first thing in the morning when you're an interest rate guy, that a bond auction ended up with negative yields. It shouldn't have been shocking considering the market, the secondary market already did that last week.
Right.
Those are compelling stories.
Yeah.
So if people want to pin the tail on the motive, what's making markets move, there's really big things out there. And don't dismiss the notion of how this feeds on itself. But I will caution a little bit of patience. On Monday, we had an intraday low in tens of 237. We settled at 240. Today we have an intraday low at 235. Let's see where it closes. I really think that even though today has a squeamish interest rate feel to it, there's a whole lot more back and forth trade than much of the way down over the previous 5 sessions. And I think that augurs for a little stability. And Bob Pisani has it nailed that we don't need rates to move up. We need rates to be a little more calm with respect to sideways. Sideways works.
Fear
and I think we are getting closer to sideways, yes.